Today we're looking at the Japanese yen at the crossroads of policy and politics. A super interesting story here as the week unfolds for the Japanese currency. If we go over to the next slide, setup is pretty straightforward, but these details are starting to matter more and more. As you may know, and anyone that's traded this Japanese yen before, kind of susceptible to the rumor mill more than other, possible central banks discussions. The U.S., of course, its impact from Fed speakers absolutely felt, but by the time we get to these rate announcements, pretty priced in. The Bank of Japan has, some sort of surprisability still respected by financial markets, and what we've gotten this week has been, a huge run up in this U.S. dollar on the backdrop of other U.S. dollar weakness. If you check not only the U.S. dollar, Japanese yen, but pound yen, euro yen, you'll see this widespread yen weakness. And we saw this on the heels of the Prime Minister, Takaichi. It leaked through local media that she might have put some pressure on the Bank of Japan Governor Ueda, concerns over future rate hikes, which is a dovish signal for these markets. And Japanese yen traders and bulls have been waiting for another rate hike as they, are now in the positive territory, over 0%, but still ultra low interest rates overnight. And we'll get into, how this kind of sparked some fiscal expansion fears. And another interesting storyline that the rate checks that we saw really give the yen a lot of strength. What was this? At the end of January into a weekend, I believe, January 23rd, that sent the yen soaring over 3%. Now comes out that was more U.S.-led than Japan themselves asking for that rate check from U.S. banks. And that, of course, spills into the intervention storyline that the Bank of Japan was willing to step in, that now seeming like it's one more step removed, right, that it was the U.S. asking. Speaks to possible coordination, which would have been a substantially bigger deal than just Bank of Japan intervention alone, but that not looking as imminent. So we've got a pretty healthy range for this U.S. dollar, Japanese yen, and you'll see those that huge green candle coming off of that PM commentary, dovish commentary, and then again last night on the nomination of two more elected officials for the BOJ, of course, the Prime Minister's selection. So some dovish signals this week. If we kick it over to the next slide.
That's been a multi-day fade here in that yen.
Yeah, but still looking at that hourly chart was, some pretty healthy ranges. And when you think about it from a 24-hour perspective, you have this kind of sentiment differing from the European session. Big slide, U.S. traders kind of tampering it down a bit. But why this matters and how we got here is kind of this story from confidence to repricing, because as we knew, weekend risk a few weeks back, the Japan had a snap election in which, going into it, it appeared the risks were, if this prime minister gets a larger majority that's more pro-stimulus, that could fuel further yen weakness. Well, that's exactly what happened, except it didn't fuel yen weakness. It actually, markets giving Japan equities and the currency itself the benefit of the doubt that says, maybe we'll give this administration a try. If this can reignite growth with, less political blockers, less political gridlock, then that might eventually lead to a stronger Japanese economy and, by extension, Japanese yen. So we saw that huge shakeout to the yen's favor of around 3%, and that started at where that little arrow is near the top. And now where we're at is, if we'd given Japan the benefit of the doubt And now it's looking like, oh, we're hearing commentary where the influence that's being used is now just for more dovish input on the Bank of Japan, and they're looking to keep overnight interest rates low regardless of what's going on from an economic growth perspective. Then maybe that was the wrong perception. And if you were to think that line of thinking, we've retraced a lot of it, but we still have 122 pips to go from where we're at currently. So that might be enough to incentivize a long position here just on this this move. While of course it's been 3 green days for the dollar against the yen, as you can tell from the magnitude, we've seen crazier shakeouts to the downside. So perhaps even if it is a grind higher, we do retrace this move completely. So I think that's a very interesting lens on this. But if we go over to the next slide, we can see what the catalysts could be for the rest of the week in this market. From a yen perspective alone, you also have the backdrop of this is the dollar's move against the yen while the dollar's being compressed, right? So anything to bolster the US dollar would likely play through to this Japanese yen as well. If we could go over to the next slide. There you go. And so this week we've got some more commentary directly from one of the BOJ governors, and over the weekend, Sunday Night Open, another governor speaking. So we'll see if they speak to this directly, because we've gotten some kind of one step removed news of rumors. So we've got that on the table tonight. And then Thursday night, we've got Tokyo CPI, kind of a mid-tier data point by any metrics. But what you see here from this graph is, to me, that doesn't look like a sustainable trend in inflation to merit further rate hikes, right? And so we're seeing this kind of fall off a cliff. If we get a shock to the upside, then maybe the narrative becomes, even if there is some political pressure to keep rates where they are, the data's unmistakable that we are growing as a nation, and rate hikes are warranted. So that's what I'm looking out for. And then, of course, any sort of trade development from U.S.-Japan perspective could also spark volatility in this pair. So that's what I'm looking at this week. But on the next slide, we'll see the catalyst that, perhaps comes to mind first when you think of trading the Japanese yen, on slide 4. Is this U.S. interest rate story. If we could flip over to the next slide, please.
Bueller.
Bueller.
If we can pop to slide 4, thank you.
Is this U.S. Treasury rate correlation, which we've seen time and time again over years and administrations, that this correlation with the Japanese yen to here the 10-year note, a very positive one over the long term. This is a 3-month correlation, and we're dipping, perhaps bottoming from recent lows where this was primarily Japanese political and fiscally charged narrative that was supporting the yen. And we also have U.S. 10-year Treasury yields at a particularly interesting inflection point. U.S. Treasuries haven't necessarily been an exciting storyline. If that were to pick up, we move drastically away one way or the other from this 4% rate. We could start to see this correlation pick up, and regardless of what's going on domestically in Japan, we could see a lot more movement in this exchange rate just from this alone. So that's pretty interesting to me. How I think about this. This is the yen and the 10-year note positively correlated. So as a spot FX trader, that also means that the dollar yen and Treasury yields are positively correlated. So inverses of both it gets me time and time again trying to situate north from south. But just to wrap up on the last slide, this dollar yen, where next for it? Of course, past performance, not necessarily indicative of future results, but a lot of backdrops that could possibly merit, conviction into getting directional in this market. You have that retracement that I talked about, where, from a narrative perspective, what traders anticipated out of that election weeks ago, not playing out yet how we'd expect, and dovish commentary fading the yen this week. And then also it starts to get more interesting if we move away from current price action to the downside. You see that line on the bottom that is a pretty supported swing trend line all the way from the tariff onset back last April. We've seen that bounce off that line 5-6 times, which of course just a line on a chart, but particularly interesting to note that if we were to get a reversal here, I'd look for that 153 level to really see if momentum favors the yen. But also bouncing off of that bottom line that's free flowing, the 200-day moving average, which for older traders was more of a gauge.
Why did you look at me when you said older traders, Glenn? What are you trying to say here?
Well, I can't look at myself.
I was just wondering. This felt. I'm sorry. Go ahead.
Jamal, any comments on the
No,
200?
no. Don't let me interrupt you.
But certainly a lot to look for, whether you're thinking of this from a longer time frame fundamental picture, if this is a cheap place to get long the yen after missing it perhaps the first time weeks ago, or just trying to play the range on a very tight basis, even zoomed in tighter than this daily chart. You'll see a lot of the wicks from recent days have a lot of the candles have longer wicks, and so we've seen from a scalping perspective a lot more tradability, two-way action, even in these trending markets. So perhaps important to stay agile until a clear direction breaks away. And then, if we get up to 158, 159, then we start talking about intervention again. And that's a fun, scary one to try and trade. So that's what I'm looking at from the Japanese yen this week.